they, first thing, you know, most kids do when they get pay raise and all that, they buy themselves a bigger house. Oh, my house is an asset. Now, who tells you that? Your real estate agent, of course.
Yeah.
Right? Because they want to give you this false sense of security while you're getting screwed.
Exactly.
You know, but when you look at what happens with a house, a personal residence, something I live in, the money comes in and goes out, and this is middle class, but it also goes out through a mortgage payments. Oh, but I don't have a mortgage. You still have taxes. You still, you know, Hawaii just raised the property taxes on me, which is probably what I'm going to sell. I'm going to get out of Hawaii. But you have taxes and you have upkeep. So money's always flowing out. So that's why your house is not an asset, is because it's taking money from your pocket. So very simply said, assets put money in my pocket, liabilities take money from my pocket. And then this here is, so I'm not saying don't buy a house, but here is a house. And I started when I was 25, bought my first house, and it was an apartment, it was an investment property. I didn't live in it, I rented it out, and it put money in my pocket. So very simple, the definition of asset and liability is not the house or this, it's cash flow. Where is the cash flowing? So as a young person, and to all millennials or if you're old, financial intelligence is the ability to control cash flow. And that's what they don't teach you at school. They tell you to go to school, get a job. First thing is tax. You know, you'll pay, most of your money will go out through taxes in your lifetime. And then they tell you to buy a house and a car. A car is an asset. No, a car is a liability. You got insurance, gas, upkeep, and all this. Now, if you buy a taxi car, it could be an asset. It's cash flow. And that's very simply it. So this is a poor person. Money goes out. There's a lot. We just interviewed some National Football League players who make millions of dollars in their 20s. And most of them are broke in 2 years because they can't control cash flow. Intelligence, IQ, is can you control cash flow? Not your college degree. College degrees are important, but they're not going to teach you this. So the cash flow game trains you over and over and over and over again to get your money in here to get cash flow this way.